Very good afternoon. You're watching the special edition of the Newsroom Budget Special Vikas Ki Guarantee. We will be analyzing what the market would watch out for this budget, along with the veteran fund manager Manish Sonthalia from Emkay would be joining us. So some very interesting visuals coming in right ahead of the budget. The halwa ceremony, which everybody watches out for, Finance Minister, and the entire team which puts the budget together was joining her in this halwa ceremony. But will the market get the halwa or not? Well, the economy has been on a very good, strong momentum thanks to the policies of the government so far. How would budget be used as a platform to give further impetus to those policies and also the various sectors which should be on your radar? So we'll pose all these questions and analyze it from the market standpoint. Manish Sonthalia is here with us. Manish, afternoon. Thank you so much for your time. So you have seen many budgets and you have analyzed the market impact, if any, and which sectors get the boost. This time, first of all, I'd like to understand what would market watch out for on the capex number and also on the fiscal deficit number, and why it would be important in the current environment.
Right. So, thank you so much for having me on the show. I think the government is doing well as far as the revenue collections are concerned. We have seen some around 12% increase in GST collections, plus some 17-18% increase in direct tax collections. All in all, plus transfers from the RBI to the government, etc. All in all, gives us the comfort that since the revenue collections is quite robust, government is on its way to achieve its fiscal deficit number, which they targeted for fiscal 23-24. As against 19 odd lakh crores of total fiscal deficit, for the half year, they have been slightly better than what had been estimated or budgeted for, at 9 lakh crores. So, all in all, I think fiscal deficit numbers would be better as against the estimated numbers for fiscal 24. And I think based on that, a revised target lower than what was previously estimated is going to be set for fiscal 25. So, and this all on the basis of nominal GDP growth projections of anywhere between 10.5 to 11%. I think if the numbers are projected to be beyond 11%, then I would believe they need to be taken with a pinch of salt. But any nominal GDP growth of between 10.5 and 11%, I would think that the numbers would be quite credible. So that's how I would look at it as far as the fiscal deficit numbers concerned.
In fact, my colleague who has a pulse on the North Block, Prakash, is joining us from New Delhi. He's picking up that there could be a hike in the capex, the planned capex, anywhere in the range of 10 to 15%. Prakash, fill us in.
The countdown for the interim budget has begun, and we are learning from our sources that the government is likely to increase capital expenditure target by 15% in the interim budget, and proportionate announcement could be made on February 1st. We are also given to understand that the government will not deviate from its fiscal roadmap. Sources are informing that despite being an election year, government will stick to its fiscal management. In fact, it will achieve fiscal deficit target of 5.9% for the financial year 2024 and 4.5% for the till financial year 2026. Sources are informing that there will be a balance between capital expenditure and fiscal prudence. In fact, government will make a better balance.
Manish, right ahead of the budget, every time there is expectations whether there would be some tweaking or relief for the common man on the income tax front. Do you expect something this time around? Also, leaving some extra money in the hands of the income tax, there would be some amount of consumption boost which usually comes in, because that money is not incrementally saved. It is spent on consumer durables, travel and other stuff. And that the lower end, middle and lower end of the income strata has lesser number of money in his hand. So you think that is a possibility this time?
So food inflation is running high, and in the backdrop of the elections that is likely to be there in April and May, I would believe that subsidy numbers are likely to be breached on the higher side. So already the entire budgeted allocation to fertilizers has been spent. And obviously, if you look at last year's numbers, we spent around 129 or 130% of what was the budgeted allocation last year. So since we have already exhausted fiscal 23-24 fertilizer subsidy amount, this number is going to get higher. Secondly, again, food subsidy numbers will be breached on the higher side because again, that number, has been exhausted, based on the numbers that we have seen so far and compare it with the same period last year. So of the 2 lakh crores of full subsidy amount, and because food inflation is running high, I would believe that subsidy numbers are likely to, be on the higher side. And how will the balancing happen? I think, not all the amount that is budgeted for capital expenditure in fiscal 23-24 are likely to be spent. So the finance minister in the budget speech had articulated that they would be spending 10 lakh crores on capex. Based on available numbers so far, and 10 lakh crores essentially means around 84,000 crores per month. And, as against 73,000 crores per month the same time around last year. So obviously, the spending has been quite good. If you look at last year, same time, the 7-8 months of, data that we have, 30% increase in capex. But the ask run rate to achieve the 10 lakh crores is steep at 1 lakh crores. So I don't think that number will get executed till March. So I think a bit of rebalancing from capex to subsidies might happen. And that should be good for the common man who is likely to spend that and get some relief from very high food inflation that we are seeing in the economy. And that bode well for, the election community as well.
Fair point. So you are too expecting some, leaving extra money in the hand of common man in the form of higher subsidies. Prakash, what are you gathering on that particular point from your sources?
Yes, an important development coming in as we are learning from our sources that the government is likely to provide some relief to the taxpayers in the interim budget. We are given to understand that relief could be given in direct taxes under new tax regime in order to make it more attractive. Sources are saying that tax exemption limit likely to be increased to rupees 3.5 to 4 lakh. Along with that, when it comes to the overall tax rebate, that could be increased to rupees 7.5 lakh under a new tax regime. Going ahead, sources are also saying that the process could be simplified further under new.
Okay, so the slabs actually may be moved higher and some relief on income taxes also what Prakash is picking up. Manish, what is your take on the defense space? Not only in this budget, but outside of it, there's so much work has been done. The defense space has got re-rated. Do you have exposure in defense too? Or you think that it may not be a great idea to be a fresh buyer in defense stocks? But yes, there is structural tailwind in the space.
Yeah, so I think the defense space does present a good opportunity for the medium term, but current valuations may be slightly prohibitive. So I think on an overall basis, defense expenditure accounts for around 13-14% of the total expenditure. Fiscal 24 government budgeted for something like 5.9 lakh crores. I think they are on target to spend that, but most of it is actually going into revenue expenditure. So, and of the revenue expenditure, there's been some provision for pensions on defense forces. So I think this time around, again, on a higher base of the budget balance sheet, you will have something like 13-14% spent on or allocated for defense. And in that backdrop, the capital allocation will also come through. So it's a multi-year story as far as defense stocks are concerned. As and when there is a correction, I think these would be one of the spaces where, one should likely be adding, and we'll also try to take a look at a few of them, how to buy them in our portfolio.
Sure, fair point. Structural tailwinds intact, multi-year theme strength is there, but buy on sharp pullbacks or corrections. Sumit, what are you picking up as far as the defense sector goes this budget?
At a time the world is going through different geopolitical challenges, sources are telling us that India's defense budget can see increase of 5 to 10%. Last financial year it was at 5.9 lakh crore rupees. It's going to go up further. Last year a majority of that part was well divided between serviceable, which included pensions and capital expenditure. This time also there will be a boost to Make in India, R&D, and also giving boost to Indian companies, especially public sector units. So all that will be part of the Indian budget, though it's going to be vote on account this time. But looking at the challenges India is facing, it can't leave any year for not spending on its military infrastructure. We have seen over the last year it has gone up, and India is getting we can say that investments in foreign investments, also technology partnerships also. So it's going to be focused on that. Also, one more area of focus will be drone technology, which is becoming very, very important. Though drone individually are given a boost through a various scheme, defense drones, while those kind of startups will also be given a special kind of incentive or boost through different scheme in the upcoming vote on account on February 1st.
Manish, how are you playing the railway ecosystem in your portfolios? I mean, traditionally, I remember there must be half a dozen companies which may be directly linked to railways. But over a period of time, there are so many different categories of companies which are foraying into railway. As diverse that this morning I was speaking to Amber, they are doing a railway-related, JV and air conditioning. How are you playing that in your portfolio? Very dynamic minister, so much happening outside of budget too in railways.
Yeah, I think the budget document, whatever was allocated, and this is one of the spaces to watch out for. How much is the allocation to railways, roads, and housing. These are the three main areas where one needs to see how much the government wants to allocate in terms of expenditure. As per the allocation that was there for the last year, the railways has already spent more than 80%. So obviously, you see a lot of order books coming through for the railway sector. Again, it's a multi-year theme, but stocks have rocketed and moved up too soon, too fast. Would wait for corrections to look into the space, but quite a few good opportunities in this space, particularly where there's some involvement of technology, whether it comes to, let's say, cover system or signaling systems, etc. Not just the plain the wagons, order or coaches ordering, which is more of a fabrication sort of a work. But where there is some involvement of technology, I think I'd be more inclined to look at those spaces. But many new companies will cater into this space, and the area is very exciting. But valuations need to be balanced.
So technology-backed railway themes is something you should keep on your radar. My colleague is here, Sameer, to talk to us more about specifically what he's picking up the focus on railways could be. This is a very important area, as Manish was also saying. Sameer?
A big gift to the rail travelers is expected in the upcoming union budget. What we are picking up from the railway ministry sources that in a move to enhance faster rail transportation, a better and comfortable rail journey, the government is likely to announce a sleeper-based Vande Bharat train in the full-fledged union budget. The first prototype of such a sleeper Vande Bharat train is likely to hit tracks by March 2024. And the rationale behind this move is that there is a big infra project which is ongoing in Jammu and Kashmir, and that is near to completion, and the inauguration can take in the month of March. And it is also very likely that the Prime Minister may inaugurate this big infra project in Jammu and Kashmir. And it is also very likely that the first prototype of a sleeper-based Vande Bharat train will be flagged off by PM Modi and will run.
So Vande Bharat trains already becoming a rage among the new age traveller, and now we hear that not only this, even sleepers would be launched soon. Manish, I want to understand on housing. You briefly touched upon that. Housing has a multiplier effect as far as the economy goes. Here back, I mean, in the markets too, the real estate company volumes are speaking for themselves. Where are we in the real estate cycle right now, which seem to have turned in your view? And what is the best way? Is it housing companies, housing finance, real estate, building material, etc.? How would you approach this space?
Any and all of them. I think there will be impetus on few more deductions coming in on the housing front. The country needs houses, many more houses than what we have. And obviously, the lower income strata will have some benefits. As it is, you pay hardly any tax till about a slab level of income of around 9 to 10 lakh rupees. So I think further incentives on housing will come through, in the budget, or let's say whenever the budget is announced post elections. There it should be there. And I think obviously real estate is in an upcycle, more like 10 to 15 years. We're already there in the second or third year, and there's a long way to go on the upside. So anything and everything associated with real estate demand is likely to do well, whether it be tiles, whether it be cement. Off and on, there'll be pockets of strengths and weakness because it's not a one-way linear journey on the upside. But these spaces do have opportunity.
Fair point. Prakash, tell us, what do you gather on housing?
Yes, what we are learning from our sources is that the government is likely to announce a new home loan scheme in the interim budget. This scheme is going to be focused on urban poor and middle class, where the overall size of the scheme could be around rupees 60,000 crore. And the government will provide benefit of interest subvention to the home buyers that could be in a range of 3 to 6%. Along with that, sources are also informing that the home buyers can avail benefit of interest subvention on home loan up to rupees 50 lakh. Along with that, all the modalities have already been completed by the government. As you are aware that the Prime Minister has announced a new home loan scheme for urban poor and middle class, and since then, concerned ministries have been working on these modalities. Some of these suggestions which have been made by the Ministry of Finance have also been incorporated in the final proposal. And we are given to understand that this scheme could be announced in the interim budget.
All right, gentlemen, along with Manish, stay with us. We'll take a very short break, come back and put the spotlight on some more sectors and also on markets, the relationship between markets and budget with Manish Sonthalia on this other side of the break. This is a very special episode we are having on the relationship between the budget and capital markets and why this budget would be a Vikas ki guarantee. We have Manish Sonthalia sharing his inputs from the market standpoint and all my colleagues in Delhi giving us exclusive stories on what to expect this budget. We also have Prakash to talk about what exactly to... Samir, in fact, is tracking auto PLI space. That is something which the government has got its impetus on, not only auto, but the entire auto ancillary ecosystem as well. Manish, I'd like your opinion on that one, FAME 2 subsidy extension, etc., and how EV batteries, the other, the parts of the auto ancillary part is also likely to be included there in a minute. Tell us, Samir, what do you gather?
A major announcement giving relief to the auto industry might make a way in the upcoming union budget. What we are picking up from our sources that the incentive disbursement under the PLI scheme for the auto industry or for the beneficiaries, currently it is annually, the annual disbursement is done and it could be revised to quarterly. That's a long pending demand of the auto industry. They have been pitching to the Ministry of Heavy Industry and to the concerned government offices that the incentive disbursement should be revised and it should be made quarterly. Industry is of a viewpoint that the quarterly disbursement of the incentive under the PLI scheme will give further liquidity, will improve the cash flow to the beneficiaries, and this will further help to improve the production cycle as well. The production could be upskilled, and that's the view that industry is having. And moreover, what we are also picking from the sources that the Ministry of Heavy Industry has largely given a consent to this demand and in the same direction. So as to implement this, more testing agencies could be included as part of the PLI scheme so that this demand could...
Manish, where are you more comfortable right now in terms of valuations, policy impetus and also earnings growth? Is it auto companies or auto ancillaries or batteries?
So first of all, I don't think FAME 2 is going to get extended because of a lot of misuse of that. There's a sunset clause 31st March. If at all it's launched in a modified form, I think checks and balances will increase when it comes to, FAME 3. Having said that, I think we are too positive on two-wheelers, more than four-wheelers as we move into FY25. We are seeing that Obviously, rural is changing at the margin. Festive season was very good, and post the fourth quarter when there is an year end, the new year, basically your 1st of Jan, we're likely to again see better demand for the two-wheeler space per se. In the auto ancillary space, I think tires are doing quite well. Valuations are extremely reasonable. A few other areas like forgings, selective names are there. Even batteries, where there's a bigger value add and guys who are actually working on technology, where there's some element of battery storage system innovation going on in those companies, we are more inclined to look at them. Others like, which are catering to the ICE set of things, ICE side of the automobile space would be a lackluster one.
Right, fair point. You don't expect FAME to get extended. That's a fair point, but that's how you should approach the auto space. My colleague who tracks the entire healthcare/insurance space also very closely is also joining us. Anurag, tell us, what are we expecting on Ayushman Bharat front this budget?
Insurance related announcements are expected in upcoming union budget, and as per our sources, scope and coverage of Ayushman Bharat health insurance scheme is likely to be increased. Presently, Ayushman Bharat health insurance scheme provide some insurance coverage of 5 lakh rupees to around 10 crore BPL families, but in upcoming budget this limit will be increased, and as per our sources this limit will be at least 10 lakh rupees. And the scope of coverage will also increase. Presently, it is limited to the BPL families only, 10 crore BPL families. But this will, government is likely to enhance the coverage of this scheme to the MSME workers, gig workers, workers of unorganized sector, senior citizens also. Apart from that, a dedicated standard health insurance policy also can be announced in the budget.
All right, thanks very much for that. In fact, Manish, thank you very much for your time today as well, talking about a host of sectors and how market would be reading into the various parts of this budget. My colleagues too joining from New Delhi for all the budget khabar for this show. I hope you enjoyed this special edition of the Newsroom Budget 2024 Vikas Ki Guarantee. Thanks very much for watching. Goodbye.
Friends.